Righto, welcome to the blog for Friday, 17th of August. Just before I go on and talk about a few of the things I normally do, I just wanted to go through a couple of things, and that is, with this blog now, there's a few people that listen to it, just a few people, some dedicated traders that, where we can just share a few things and believe that they'll get something out of it. So a few people do listen to it, but remembering when I approach this blog, even though I say welcome and goodbye at the end, treat it like how I always have done, and that's a bit like as though it's something commercial, that I'm speaking to all these other people, but at the end of the day, it's something I do purely for myself, and I encourage other people to do it as well, the blog, and it's a way for me to really consolidate what I'm thinking every day. So treat it like it's something, like hundreds of people listening to. But at the end of the day, it's just really me speaking to myself, and that's the way it's always been something just that I do purely for me to better my trading. Another idea, and I've got this from Brendan and Bo, the two guys that will be listening to a few of these, and they had a few questions, and I thought that those questions, what I'll do is answer them in here, because quite often other people can learn from them, and not only can other people learn from them, I'll definitely learn from them too. Any question that's asked of me, I'll just tell it in my perspective and in relation to how I trade, and by me just really confirming that out loud and doing it in regards to my blog, it's something that's benefiting me and benefiting everyone. So I think that's a great way. So if anyone's got any questions, by all means, send them in, and what we'll do is I'll just spend some time answering questions at the beginning of the blog if there is any. Otherwise, I'll just move on and do the normal thing. So let's go ahead and start the blog. So this is for me day 50 of 65. So basically, it's the 10th week out of this 13-week challenge, the compound effect. We're making forward progress every day, applying my edge and method. And it's all about doing the little things. I've got a little checklist to tick off, and sometimes it's the little things, they seem so simple, but at the same time they're simple not to do it as well. But if we keep on doing all the little things and just have a specific target for ourselves to hit, even if it's something that just appears so simple, it's amazing how powerful doing the little things can be. And that's what this challenge for me is all about. I'm now 10 weeks into it out of 13 weeks, and if I look back to where I was 10 weeks ago, as far as where I want to be in relation to my goals and my trading, it's making a massive difference. So approaching in, and once I reach into the challenge for myself, just about setting myself a new challenge and doing something different. As far as the trading plan, so going through the trading plan and really consolidating in my mind exactly what I'm looking for by me doing this every single day. Basically, my three strategies there. I'm just becoming very, very clear on exactly what I'm looking to trade and where I'm trading. And of course, it's about being very systematic and doing the same thing over and over again, and not letting discretion come into it. So what I'll do is I'll just skip through this bit here. I'm actually going to spend quite a bit of time at this blog. It's probably going to take about 10 minutes or maybe even more. So this one might be a slightly longer blog, just explaining from one of the questions exactly what I look for in a trading in my trades in my 6 areas. So I'll get to that in a sec. So I've just brought up something here. What I'm going to do, 3 questions, just to outline the 3 questions first up, so we know exactly what we're talking about, is one, to outline exactly what I trade and also what Seb trades. So I'm going to actually, and that's it really correlates to this, because me and Seb trade similar areas but quite different in the way we approach it. So I look at exactly how I trade and how Seb, as maybe a point to relate against how Seb approaches it. Obviously, I don't know the ins and outs of exactly how Seb approaches, but I've got an idea of what he does. The second question is, how would you trade the gap, or how would you trade the first trend of the day? Many people see the market just head off in a direction and just keep on going at the start of the day. Okay, so in that, there's a specific trade which I got based on that. One of the 6 areas is purely on that, and how I do that, or how other ways you could possibly do it, and what other members are doing to trade that particular area. So that's the first trend of the day. How do you do it? And then the third question is about price action. Someone saw Brendan was speaking about how a guy called John Paul talks about using very little indicators and trading price action, and heard myself mentioning price action and how you trade price action. So just talking a little bit more in general about price action. Of course, that's basically the basis of how I trade. And actually, I might even start off with that point just before we get on to this here. So let me just minimize that for a second. Today's not a great example of key levels in the market, neither is that. I mean, this has been quite a slow week, here's a better one. So just to start off with, when we talk about price action, that's basically trading with emphasis on pure price and what price is doing, rather than letting indicators try and tell you what it's doing. So there's a couple of different ways you can trade, and your course can have both influencing your trading. But at the end of the day, trading indicators are based on past information, so there's going to be very much a lag, and they're designed, I guess, they're one person's way of interpreting the markets. Trading indicators are fine and they're great to use, and I use them in different areas, but I'm certainly not basing my entire trading strategy off them. And what I am doing is just using them as a guide. So the first thing I do is base it on price action. Okay, so talk about price action for a second. What I do is use a top-down approach, where before I start the week, I look at 15-minute charts and 60-minute charts. So to me, I see them as medium-term markets, so 60 minutes and 15 minutes. Okay, I rarely use the daily chart. I'll have a bit of a look. If there's something standing out on the daily level, I will use it. But what I do is go to 60-minute charts and 15-minute charts and find where the market keeps on reacting. So drawing in support and resistance lines. So from that, and that's what I call my predetermined key levels. So I've always got those marked on these charts when I start the day. Then based on those predetermined key levels, I've got a couple of trading strategies that are based purely on them. So I'm looking for a blueprint of the market reacting a certain way around those key levels, and that's where I base my trades off. And then as far as using indicators, the way I use indicators then is to make things really simple and as black and as white as possible. I don't want something that's really quite discretional. What they say, a good systematic approach is something that you can take, give it to someone else, explain it to them, and they'd be able to go ahead and trade it for you. It doesn't rely on you making all these little decisions, and it's kind of really pedantic. You want something that's systematic, but that someone else could pick up quite easily. And that's an example of something that's simple and relatively easy to follow. So for me, I'm always wary of doing something that's easy to follow. I don't want to make it really complicated and pedantic, I suppose is what I'm trying to say. So for me, how I'd use indicators is this moving average line, so the moving average 20. Basically, I'm just there's two trades I've got, which I'll get into, based on these key levels in the market. So when it comes around to the key level, I've either got to decide, am I going to buy off the key level or sell off the key level, based on the blueprint of what I'm looking for. And for me, I just purely go in the direction that this moving average line is pointing. If it's pointing up, I believe price action is up. If it's pointing down, I'm looking at price action down. I'm only looking at sell trades within those couple of areas that I'm looking at. Okay, it's not the basis of all my trades, because I've got some trades that are completely different. They go against this, but it's a completely different setup. But based on this area, when I'm trading off these key levels, I use indicators or moving average 20 to purely tell me which way the market is, up or down, rather than me deciding is the market action up or down, which in the past, probably going back about 6 months ago, I did that. I had a decision where I could overrule this moving average line and decide which way the market's going. But at the end of the day, that was something that's very discretional. I think it was maybe a little bit confusing for myself. Maybe a couple of trades out of 10 I would have overruled and gone in an opposite direction, but I didn't necessarily get that right or wrong. And at the end of the day, it was all this extra work for something that's not a lot, for a trading result that probably wasn't any different. So I wanted to clear that up, make it as black and as white as possible, and for now I just go with the direction of this moving average line. So that's an example of how I'd use indicators. And then price action, to answer the question a little bit more, I'll leave that to when I go through my 6 trading setups, which I'll do now, because a lot of them are based on price action and different ways of interpreting price action. Okay, so I've just brought up a sheet here to help. Excuse the handwriting. I just find this the easiest way to do things. Me just to draw it out, and I can just do it exactly the way I want it. So I'll try to draw as neatly as possible so people can understand it. But basically, just to give a real quick overview before I get into the individual trades, there's 6 trading areas. Those 6 trading areas are divided into 3 strategies. Now, what I'm most interested in is these three strategies. Even though there's 6 trades, technically I'd see myself as a 3-tier trader, meaning there's 3 particular trades I'm looking for, or 3 strategies. But within those 3 strategies, I just divide it into a couple of different blueprints. Okay, so for each strategy, I'd say for myself, I've got 2 blueprints that I'm looking for. Okay, so strategy 1, just to go over the 3 strategies to define the rough areas, then I'll get into the trades. Strategy 1 is all about continuing a trend. Okay, so continuing trend strategy. Basically, I'm looking at trading with the trend or the direction. So like I said before, the direction, the moving average 20 line, Okay, so trading with the trend or direction of the charts, as long as they're not near the high or low, as in not within 10 ticks, actually 2.5 tick points of the high or the low. If they are within the high and the low, I still trade those areas, but it then becomes the next strategy. Okay, so what I'm doing is looking for a continuation of the market trend or direction. That's the same thing, as long as they're not at their highs or lows, because once it gets there, it's a different ball game. So I'm looking at trades, mid-range based on key levels. So, and again, trades are based on predetermined key levels, which I showed you before, and I get those from looking for support and resistance lines that are obvious on the 60-minute and the 15-minute chart. What I'd say is roughly, I'd probably have a key level on my charts, anything from 2 to 3, maybe 4 key levels in a daily range that I'm looking at. So there's not lines everywhere. I'm just, obviously I don't want every point or every 2 points, but maybe every 4 or 5 points, I've got a key level. Sometimes every 3 points. Okay, so that's I'm looking for the continuation of a trend. Strategy 2 is the same concept, okay, but breaking the highs or the lows. So breaking the high or low strategy, much like the strategy where I'm looking for a continuation of the trend, but in relation to the high or the low points. And basically, I'm looking for a same sort of thing. This time I don't specifically need a predetermined key level. What I need here is immediate price action level. And I'll get in and show you some examples of this, but basically the same sort of thing where the market keeps on reacting to a certain price, but rather than being over the long term and predetermined over the long term, say days and weeks, this is something that the market keeps on reacting to a certain price over the space of anywhere from 20 to 60 minutes. Okay, and I predetermined a price based on this particular area, which I want to trade off. Okay, and also this is a key point here. This is the other half of the trade, is it needs support or confirmation from other markets. Meaning, when I'm trading the highs or lows, even if I get immediate price action and I get the blueprint and everything that's going, got the setup, I must have the other markets, doing the same thing, or if not better. And I'll get into that a little bit more when I talk about the trades. But because we're approaching the highs or lows, because it's a different area, I incorporate the other markets. And you'll find with strategy 2 and strategy 3, it's all about incorporating the other markets. Whereas strategy 1, it's the same concept, basing it on price, but because it's mid-range, I'm looking for these key levels to hold really strong, and I'm not so concerned what the other markets are doing. Okay, so strategy 1, continuing trends. Strategy 2, continuing trends, but at the highs and lows. And then strategy 3 is about a change in direction, or what I call a pivot strategy. So this is where, so I've said here, strategy 1 and 2 obviously is about continuing the existing trend, whereas this strategy is based on mean reversion. So what mean reversion is, trading within the current range. So what I'm looking for is the market, rather than continuing and breaking, basically it's the opposite to a break low or break high trade, looking for it to break back down or up within the range. So coming back and starting a new trend within that range. So for me, I feel that there are 3 areas that I'm comfortable with, and I believe that I've got most of the market covered. A trend that's mid-range, an area that's going to continue and break the highs and lows, or an area where it's basically gone to its high or low, and many times it doesn't go higher or continue on, it starts then to come back within the range and head back where it came from. So there are 3 areas, and that's the 3 areas that I wish to cover. So back to strategy 1. So I don't want to get too bogged down, otherwise I'll be, I tend to rave on a bit, and we could be here for hours. So I'll give a bit of quick explanation of it, and I just want to bring up 1 or 2 previous trades based on. Obviously, I'll probably going to pick the winning trades. With these ones, there's winners and there's always losers as well. But for this exercise, I'll pick the ones that looked a bit more obvious or worked a little bit better, just to make the example a little bit clearer. But on that point for a second, it's very important with trading, and something that I really focus on, and is having something that's very systematic. And at the end of the day, it's not about you deciding to take the trade. It's your model, and you should create a model where it says very clearly yes or no. Like you know exactly where you need to enter based on model. You just take the trade, and you just lose that fear of getting it right or wrong for yourself based on your trading strategy. And then you just take it, go, okay, this is the area that I've developed. I know based on previous experience that it works, and this is what I want to go for. Okay, so first one, A and B, let me slide it up a bit so I can see both. Okay, so continuation trade and momentum trades. Remembering I'm looking for mid-range continuation of the trend. So the continuation trend is basically it's very similar to a 5-minute buy, 5-minute sell. So it's that same concept. So the market comes up. I'll talk on the buy side for both these examples, but of course the sell side applies too. Market goes up, pulls back, continuation with the trend. Okay, so that's for me. It's continuation. Obviously, that's pretty much what a 5-minute buy looks like. But for me, I've got predetermined key levels in the market. So if the market pull back here and we've got a 5-minute buy below it or something, I'm not looking for it there. I'm waiting for it to get to the key level. And I've got a very specific blueprint as to what I'm looking for, which I won't get into too much detail. It's just more the idea. But roughly what I'm looking for is market come back and go back as far as it wants through that key level, as long as the moving average is still pointing up. Because as soon as it starts to point down, I now then look at this level differently. I'd look at it as a selling area. Okay, but as long as the moving average is still pointing up, looking for it to push through, come back and use it as support, and then it get continuation. Okay, much like a momentum trade. So here's the same sort of thing. Maybe we had a downtrend, the market starts coming up. By this stage now, the market, not only the moving average has swung from pointing down to now it's pointing up. Okay, so I see this as a new trend rather than a pullback. So you see this one up here. It's basically a pullback then continues. Well, who says that this is not just a pullback and it's going to go back down? Okay, and many times it will, but I make that decision by going, okay, whichever way the moving average is pointing, that's the way I'm going to go. Okay, so now through here it's starting to point up, or maybe by here it was still pointing down, and I'm looking for the sell. So I look for a continuation to sell, but I didn't get that signal. But by this stage now it's pointing up, so I'm looking for buy trades. So this is like a 5-minute fade momentum trade, similar to a 5-minute fade, where new trend basically, here around this area here, you might get something to say, the way the normal 5-minute system would be as far as a 5-minute fade. The moving averages might cross down, it might say 5-minute sell, but by this stage the moving average is pointing up. That's how we approach a fade. I'm looking for the same thing, but I'm basing it off a key level. I'm looking for it to come back, touch, and then go on. Okay, so and this brings me to the point, as someone, Brendan, you asked, how does Seb trade? I mean, Seb trades very much based on indicators, but he also very much uses market action as well. He's aware of support and resistance areas in the market, so he basically just takes every 5-minute trade as it is, and whichever way the moving average is pointing, he takes it in that direction. But the only time he wouldn't take trades is if price action is very sideways, if the moving average is very sideways, or if there's a significant support or resistance level that he can see within today's action, just above or below the area that he's looking for it to push through. So he's got a few rules that says to keep systematic where he doesn't take a trade, but probably out of every 10 automatic 5-minute trades, he'd probably take 6 or 7 of them, and he's just taking them all purely as is. He keeps it very, very simple. So what I'd say is, as a result of that, it's very simple, but he's going to have a little bit more fluctuation of winning and losing periods. As myself, I maybe bring a little bit more complexity to it, but try to knock out those periods of longer losing periods. But what will happen is, over the period of a year, you'll find we'll probably be getting similar results. It's just different ways of trading it. Okay, so that's Seb's way of approaching it. Okay, so as far as a couple of examples, here I've got a continuation. So this is like my 5-minute buy, and 5-minute sell. And you can see actual 5-minute sell did come up eventually, came up very low, and it would have been stopped out. But my version is, okay, you can see here trend, pullback, continuation. Now my signal said for this continuation of the trend came in a lot earlier. Or another way you could look at it is trend down here, this really strong up candle like this, who says that this is not now a new trend heading to the upside, and we should be looking at buy trades. Okay, so for me, I make it very simple that I decipher that by saying, okay, whatever way the moving average is pointing, that's the direction I go. Okay, so we're now coming back, pulling back and dealing around this key level here. Okay, moving average is pointing down. So what I look for, and the reason I didn't take it here as far as a sell there is because it's basically the first trend of the day. I don't approach a momentum trade or the first pullback on the first trend of the day. Okay, again, I don't want to get boggled down with the finer or specifics of my plan, but basically I'm looking for the pullback. I need it to push through, come back, use this as a resistance and to push lower from. So you can see here it's come down, push through, come back, when it ticked through the level, and then it's gone lower. End up going about 10 ticks exactly. So that would have been my 5-minute continuation or 5-minute sell for me there. As far as momentum, let me bring up an example. Okay, so as far as a 5-minute momentum, or like my version of the 5-minute fade, what I've tried to do is find examples of the most recent. So this is one that was, I think it was last week. It's one that actually didn't get filled on, but the concept, I'll show you where I was actually looking to take a trade. So just ignore everything that's kind of written all over the markets. But if you follow my cursor, we're pushing down, we pull back, we try to push lower. Okay, then the market starts turning around, and now here we're starting to push up. Okay, so by now, because the market's tried to push down a couple of times, it's given this time for this moving average to point round to the upside. So as soon as it starts pointing up like this, all of a sudden now I'm more on the buy side. I'm just going to say, as far as my mid-range trades with the trend, I'm looking for a continuation of the trend. I'm now saying the trend is up because the moving average is pointing up. Okay, and I'm looking for anything off support of these key levels on the upside to continue up and look higher. Okay, so here the market pushes up higher. Okay, it's coming back. Here's this predetermined key level. That's the dotted line I got there. You can see here, so it's coming back, and I would have my order right there. So this particular day didn't get filled. It came within a tick of it and then took off without me. But that's how I trade. I'm waiting to be filled there. And you can see the actual 5-minute fade. They're coming up in similar areas. It actually would have been triggered and would have worked fantastic. So this particular one, I missed it. I didn't take the 5-minute fade. So Seb, no doubt, would have taken that trade there. And I'm sitting here waiting to get filled off this key level. Hopefully you can see, based on this particular strategy, two guys trading similar areas, but just trading it different ways. I'm basing it more on price action. Okay, so this is an example of price action, whereas Seb's basing it on indicators. Okay, there's no right or wrong way. What it comes back to is what suits you and your personality. I was reading a book recently about a trader. He's a very good trader, and he says he's got this whole section on trading something that's based on your personality. And then you don't want to be just trading stuff that other people have designed, or you want to find something that suits you and that you have confidence in. Otherwise, you're going to find it very hard to keep on taking those trades. So for me, just taking it based on an indicator, I think if you keep on taking these trades over and over again, it works. It obviously does. Seb showed that. But for me, it's not the way I want to do it. I want something more based on price action, because that's how basically I've learned to trade, and that's what feels good with me. Okay, it's two different ways to approach it. Okay, now moving on, next strategy, so breaking the high or the low. So remember, this is exactly like continuation strategies. I'm looking for a continuation of this trend. Obviously, the trend's heading up to the highs, I'm looking for it to push through and buy. It's coming down to the lows, looking for it to push through and sell. Okay, but because it's within that couple of points of the high or low, I treat it like a little bit of a different strategy. Okay, and what I do then is incorporate support or the confirmation of other markets all doing it. Okay, so as far as the two trades, here they are here. Now the directional or the directional break trade. Okay, this is where I look to trade the first trend of the day, get on it fairly early, sometimes within 3 minutes, sometimes it might take 40 minutes. Now anywhere from a couple of minutes into the start of the day to maybe an hour to within the day. Sometimes it just really bounces between levels. I've got predetermined levels, which I'll show you how I develop. But if it gets out of those levels really quickly within a few minutes, I'm looking to go with it straight away. If it bounces around for a while and then it takes an hour to get outside that level, well then I'm prepared to wait that long, because the trend hasn't actually really started yet. And you'll notice some days it just goes, other days it just it could be over an hour before it gets going. Okay, so that's my way of approaching it. I'll explain that in a sec, but what I want to say is, in this area here, as far as what other traders do, I know there's some traders that, for example, take the Terminator. That's where you look to buy off the power point, but a couple of ticks before the power point. I know there's some traders that power fade, take the first power fade. There's some traders that actually take the very first power point. So there's three completely different ways to approach it. I know there's one particular trader that takes the one that takes the Terminator. If that first one fails, taking the second one straight after that and looking for that to work. If the second one fails, shuts up shop for the day. So what he's going is, okay, the first one, hopefully that works. If that doesn't work, the second one's more likely to work. The second one doesn't work, well, that's my 2 losses. I'm done. But he then knows that he can make those 2 losses up in one trade the next day. But what it comes down to is just working with the numbers and back testing, finding something that again suits your personality, suits your confidence, suits your way of trading, and creating something that's very systematic. And then by being systematic, you can back test it, forward test it, however you like, get belief and confidence in it, know it's working, and then what's the most important part is to keep on taking it. Okay, but again, for me, basing it on indicators or a PowerPoint, just saying I'm going to buy off the first PowerPoint and not look at anything else. I'm not saying that doesn't work. I'm just saying that doesn't suit my personality. I'm very much a trader based on price action. So this is my way of approaching it. And what I do is basically, you can see there's a line here. I look at the pre-market, so anywhere from 2, 3, 4 hours back, and I put a box around the pre-market. Okay, I treat that as my support and resistance. Once the market gets outside, pushes outside of that support area, or outside of that top line, I want to use that as support, or say let's push it to the downside. Okay, let's say for example here's this resistance, I've drawn a box around the pre-market, gets down outside of that, I want to then use this as resistance where the market comes back, resists and pushes lower. Okay, and again what happens is I need to see all the markets going with it. Many times I'll see this set up where it pushes outside this range, then I'm looking for a buy, but all of a sudden the Russell or say something like that is just sticking really low, it's not going with it. Well, that quite often indicates for me a fake move, and you'll see the market come back within its range. But if all the markets are breaking that predetermined pre-market box, then I'm looking for it to come back, use its support off the top, or use a resistance off the bottom of that box. Okay, now obviously if you've got a really volatile morning, that this predetermined box area is going to be way too wide, well then I'm not looking for it there. What I need is something that's anywhere from 3 to 5, maybe 6 points wide. If it gets any wider than that, then it's going to obviously start trending before it gets outside the box. But the pre-market within this market that we trade, is normally quite tame until the market opens up. So I'd say more than 4 out of 5 days of the week I have an opportunity to draw that box. It doesn't necessarily I get the trade. Many times the market goes outside the box, but there's no markets going with it, so it's an easy one to leave. Okay, let me show you some examples. Okay, so this one here, I'm not too fussed on the key levels in the market. So you can see there's a key level down here. Now I have got ways to look at that, but just for this case, for this example, just ignore the key levels. That's something I use for a previous strategy. This one here is based on a pre-market. So this pre-market, so you can see here the opening of the market is here. If you go back through a couple of hours market, you can see this box. This is basically the top of the pre-market, and this is the bottom of the pre-market. I draw a box around it, so already it's very obvious, and I can see it very clearly for me. Whether you trade this or not, do this trade or not, I suggest doing something like this because it can kind of put it into perspective of what the market's doing. Sometimes you just try it for a while. You draw some perimeters around the pre-market, it will give you an idea of what the market's trying to do. You can see this box here is 1, 2, 3, 4, 5, 6.5 points wide. So for me, this is quite a wide one. I do like them a little bit narrower, but this is still fine. And the ones I really like is where it comes down towards the box and maybe not pushes through, but then all of a sudden goes back the other direction and breaks the opposite side. They're the ones that work really great. But this particular one, I'm waiting, I'm looking for it to get outside the box by 4 ticks or more, come back, use the bottom of the box as resistance, and then sell off, okay, and get a continuation of the trend. And these ones here, even though this one's only gone just about 3 points, some of these just go and go and go, and almost, if you get the direction right, some days it keeps going that direction till lunch or even halfway through the afternoon. So it is one that I look to go for a little bit more on, but again, you've got to have your way of approaching it. So that's example one. I'll give you an example one more because this one's a little bit more complicated. Alright, here's another one. This one happened just last Wednesday, I think it was. This is one that happened really quite quickly. The other one took quite a while. I think it took nearly over 30 minutes to happen, but this one, I was taking it within 5 minutes of the market opening. So you can see here, tight pre-market, which is what I like. It's only 3.5 points. The market pushed outside. You can see a spike there. So it pushed outside by 4 ticks, comes back straight away, uses this top of the box as support, and then goes. Okay, so just drawing a perimeter around the pre-market, looking for it to get outside of one of those perimeters, then use that perimeter as support, or in this bottom case resistance. But the key to this, for me, is that the other markets are going and pushing through. So I'm seeing all the other markets doing the same sort of thing. And what I could say, you keep an eye on it, you'll see. Many times, for example, I'll see the market, ES going up, but the Nasdaq or something just really resisting it, or even pushing in the opposite direction. You will see that, and it's a real key or indicator as to what this market wants to do to start off with. And then you'll see some of the other markets come back in within the range. And that's why I say before, the ones that fake one way and go the other. So for example, this came down and tried to break, then all of a sudden goes in the opposite direction. By the time it's going in the opposite direction, for it to do that, turn around within the pre-market spread and then head in the opposite direction, it needs all the other markets to do that. And it needs to be kind of a combined, what I find a combined work by all the markets. So for that reason, why the ones that fake one way and then go in the opposite direction, they're the ones that work really well. But anyway, keep an eye out for something like that. It's a way, for me, like I said, it's not based on, it might hit the first power point down here. I'm not necessarily going to buy it, like fade it or buy it or whatever. I'm basing it on price action. I know that once the market gets outside of this pre-market, that's, it's all about probability, especially if all the markets are going with it and it's breaking outside that range. I know that, the probability of that market continuing is good. And then, of course, I need some way to find an entry. So, I'll wait for it to come back and test that line that it broke from. It's very much price action based. And again, that's in relation to the price action. Hopefully from explaining this particular trade, you can start to get a bit of more understanding of price action. And everyone interprets it differently. But it's just using naked price is what they call it, or naked charts, sorry, I should call it, where you don't place as much emphasis on the indicators. Okay, so then as far as continuing on with this strategy, so that's obviously what we're looking at is breaking the highs and lows. So it's a very early break trade. Then my next one is just purely a break trade. So it's when the market has a pullback. So we're talking maybe the first trend or even second, third trend later on. But basically you're looking at a 5-minute buy or a 5-minute sell. Many times you get these 5-minute buys or 5-minute sells, and it's just too close to the highs. And as far as the 5-minute trades are concerned, the ones we take in the room, it's void once it gets within the highs and lows. But many of them still work. That was kind of the concept of me originally looking at this area when I looked at this trade about 18 months ago. I have changed it over the months as the way I approach it. Just find one that suits me best. I used to wait till it physically broke and a few different things like that. But what I've done now is create something where I want to get in a little bit earlier. So as a result, I might get a few of them wrong, but I'm looking to get on early because then some of them do break by a point or two, and I'm able to already have my profit by then. Okay, so this particular one, it's probably out of all the trades, it's the one that's most, what would I say, not discretional, but it seems to be the most complex. So for that reason, like I said before, I don't want something that's too complex. I want something that someone else could pick up and trade. I guess that's the measuring stick as to whether you've got something that's quite simple and systematic. And I'm definitely aware that this one's probably, out of the 6 trades, the one that's the hardest to follow. And as a result, it's probably the one that I'm looking at refining a little bit more. I love the concept, the way I do this, but I'll maybe look at something a little bit simpler to trade. But for now, it worked well for me, and I'll go through and explain what I do. So this on the side here, must have an area that is considered immediate price action. So I'll explain what that is, and then must have other markets supporting or breaking the area. Okay, so market trends comes back. Now, as the market's coming back to its highs, what I mean by immediate price action is if you look through a chart, and for this I use a 1-minute chart. Okay, but if you look through the area where the market's pulling back and potentially trying to go high from, you should be able to see straight away. And I mean, when you look at the chart, within a second, just see a price, within a tick or two, that the market just keeps on reacting to, especially if it comes down. And what I've tried to do is simulate it here, but it comes down, bounces off it, pushes through the level, then comes back to level. So even bounces down and up around this level, a few ticks either way. But I'm basically, and that's what I call immediate price action. So a price that the market keeps on dealing with. So for me, that's a level that the market's either going to continue up from and break, or continue down from and sell. Okay, so if it sells from it, that's not my reversal trade. I'm not looking to sell from there, but what I'm looking for is this level to hold, push past it by a certain 4 ticks, come back, use it as support, and then continue on. And now to do that, I need the other markets looking the same sort of thing. if all of a sudden you see one of their markets and it becomes quite obvious that they're not quite up around there, they're hanging off quite a bit, again, I won't take the trade. Okay, so an example of it, and I haven't got the 1 minute chart. This is a recording, so I can't actually, oh, maybe I can actually. One sec. Yeah, okay, so again, I'll show this trade here, and then I'll bring up the 1 minute chart, which is behind it here, as to what I was doing. But basically, through this level here, once it starts, you can probably see it, even on the 5 minute chart, the market deals around this specific 1403 price quite a bit, or even 1402.50. So sometimes it's a couple of tick zone. So for me, it's 1402.50. Then all of a sudden, the market's pushed through this area, and so this particular case, it physically is breaking the lows, okay, which doesn't always be the case. You know, this area here might have pushed down a little bit lower, and the low might actually be down here somewhere. So it doesn't have to physically break the low; it just happens in this particular point that it has. Okay, but what it needs to do is deal around a particular price, all of a sudden show some power and momentum through, and for me, that's 4 ticks past the particular price that I've already been looking at for quite a while, predetermined. Okay, and it's just a predetermined area based on this immediate kind of 20-60 minute period. Okay, not necessarily a level that's predetermined for the last days or weeks, so just a predetermined area within this time zone right here. It needs to push through it, come back, use that area that it launched itself from as resistance, and then continue on. Okay, so what I need to see is all the other markets push, looking like they want to break as well. So here we go. I've just brought up the 1 minute chart just to have a closer look so you can see the level. The market keeps on holding off it. Now, what I meant before is sometimes you might actually see the market come back underneath it by a couple ticks and then hit its head, go back down again. You know, it can react both sides to it. It's not a problem with it. It doesn't have to just hold above it. It can get underneath it. But what you find is just straight away, if you were to look at this naked chart, you'd see that 1402.50 is just a level the market just wants to deal with. Okay, now for me, as soon as it pushes through that level, I'm saying, okay, that's enough. So it's going to go for me, and then it needs to come back to the entry within a tick, and then sell off. Okay, so this one I would have been in. I was in at 1402.50. You know, it came back on me 3 ticks, and then eventually it's went quite well, this one. And there's a couple of trades that work to go for more in certain areas, and that's the breakout trade. Sometimes go for 4 or 5 points, and then the directional breakout trade. So the 2 breakout trades, in the right circumstances, again, you've got to have a plan for it, but they're ones that potentially can really go for more. Alrighty, so keep on moving through now. The reversal strategy, or what I call pivot strategy. So if you don't quite get what I mean by pivot, I'll explain that in a sec. But remembering strategy 1 and 2 is just, I'm looking for basically just going with the continuing trend. It's all about just going with the mechanics of the markets. And I heard a trader explain it once, going, think about a car. The quicker the car's in motion, more likely it is to keep on continuing that direction. It's got to do a lot to all of a sudden turn around, change, and head back the other way. Now, of course, that's not completely the way to interpret the markets, but I just thought it was just a good way of saying, it's just basically another way of saying the trend is your friend, always go with the markets. Okay, but within that, and what I find is a great sort of way of just almost going, I wouldn't call it counter trending, but what they call mean reversion, meaning again it's logical to say that the market has a range, it's likely to deal within that range. Okay, and this is my way of going, okay, we've had one trend, and these particular trades I'm only looking for once we've already had a trend, then looking for it to come back and then continue on and head back to basically where it came from. You know, stick within the range, and many times you see these markets come back and go higher or lower, but they don't, and then they come back into the range. So for every breakout trade, there's almost like there's an opportunity to reverse as well. So these particular trades, you know, I'm not looking for it to go for massive points. I'm just looking for a change in pressure. Once you pick the pressure point or the pivot, what I call the pivot area, you know, this is probably these 2 trades I have the most confidence, or not the most confidence in. They're the ones they've got my highest strike rate on. Okay, as far as working. But I've also, this is the top one too, I've also got probably the most break evens on as well. A lot of winners, a lot of break evens, but just because it's based on the area. But basically I'm just looking for, once the market proves itself by pushing through a pivotal point, I'm looking to get on. So to give a little bit of an example, a reversal trade, and I'll point out the reversal and the directional trade, very similar. Most of the time whenever I take it, I could call it a reversal or a directional. Occasionally they're slightly different, but they're pretty much the same So I could almost merge these trades into one, but there are times when I do keep them slightly separate for different reasons, and I have got an example of both, so I'll show you that. Basically, reversal trade, say for example we've got a trade up, comes up, pulls back, especially if we get, say, a 5 minute buy or some sort of signal here. And the way I treat it is, if we get a buying trade here, for me it's the 5 minute buy or the 5 minute fade or a 5 minute break high trade, and they fail, they don't want to work. So what that means is, this is an area where it should, basically you're looking at an area where it should go higher. It just looks like it's a pullback, market goes higher and it leaves this little swing low here. You can see my mouse there. So for me, I call that a pivot point. Okay. Now what I'm very interested in, if it's an area it should go higher and it doesn't, so many times it'll come back and bounce almost a tick off here and then go higher again. So you've got to be careful. But if it breaks this pivotal area here and other market support, so all the other markets are breaking that same pivot, you'll be able to see the same pivot with all the other markets, then it's a great place to get a change in momentum or a mean reversion area. Okay, so, and what I'm saying, if this area here I'm looking to sell, then all of a sudden I can look over and at least one of the other markets, so the Russell or something like that, it's all already well and truly broken this same pivot area, that's where I'm getting on. Okay, so technically, to be safe, you wait till it breaks by one tick. Okay, but in saying that, because of many times it kind of just goes 2 points or so and then comes back up, so you just got to be careful as to how far it goes. But when it does break, it breaks quite hard for a while. Some of them keep on going, some of them come back and just kind of pop up a bit then go. So that's what I mean, there's a lot of break even. So I like to get my entry in as early as possible. So what I do is get in early sometimes, but I really need confirmation. If I see other markets going and really breaking that pivot, and I can say to myself, this is very, very, very likely to break by at least 1 point tick, past this pivot, then I'll get in early. So sometimes I'm getting in 2-3 ticks before this pivot. But if you want to be really safe, you'd wait till it break the pivot by 1 tick. But basis of the trade is it's meant to be a buying area that starts to fail. You see all the other markets significantly breaking, and there's a significant pivot point that it breaks, and that's the reversal trade. Okay, so here's an example here. The market's, we've come down here, we've pushed up, so all of a sudden I see how the moving average now is pointing up. So I'm seeing this as a trend that's heading up, and I'm looking at buying opportunities. So basically, I'm looking for some sort of pullback, or there's no key level there for me. So maybe I'm looking for the market to come up and look for a breakout trade, look for a price action level, and look for this market to go higher. So this looks like an area where it should go higher. Everything's saying it's buying. Okay, but for me, I'm also very much keeping in mind that this swing low here, it's a bit harder to see on this chart, and I know the chart's a little bit smaller, but for me, see the market's gone up, it's come back, and it's gone higher from. So this is the area where the buyers have launched themselves from. So this is a predetermined pivot area for me. Okay, so if the market never comes back there, then so be it. But if it does, without going higher, so for example here, if this market, see it's come back here, if all of a sudden it popped up higher, then I'll disregard the area. But it's come back, we've got a 5 minute fade trade here, so that's another key thing for me. I'm not looking to actually take that 5 minute fade there because it's not based on a key level, but it's a buying setup based on indicators. Then all of a sudden, see here, it's trying to go higher, it's failed to go past the highs. I'm then all of a sudden very, very interested in this coming back and breaking this pivot area here. And once it does, that's for me, that's a sell. And this particular one, I think I got in earlier. I just remember the Russell just screaming past this pivot point here, and so an opportunity to get in, say, at the pivot or even a couple of ticks before the pivot. But you can see this is a good example of it. It goes and it gets a whole heap of pressure for, say, 6, 8, 10 ticks, then it comes back usually to that same pivotal area and then goes lower from again. So it's something I have to be careful of. I try to get an entry in as early as possible without being too dangerous, so that I can try and avoid these break-even trades. You can see this one here, I actually got a break-even. Oh, maybe I didn't. I got a break-even, I'm just not sure where I entered, but anyway, it's come back, got me break-even, but you can see the concept. So here's another example of a reversal. It's a buy setup. So saying this is one based on, would have been on a 5 minute break. So obviously if I'm taking the 5 minute break trade, I'm already in another trade, so I'm not looking to sell. But if I'm looking at a 5 minute break and I don't get the setup, that's what I really like, then that's basically is what predetermines a reversal trade. for me, my trading plan, there has to be, for example, if I'm looking for a reversal, so to go up, when the market's on the downside, I have to get some sort of selling setup. Not one of my physical setups, but for me, it's either a 5-minute sell, 5-minute fade, which is on the sell side, or one of my 5-minute breakdown trades where it's potentially setting up, but obviously I don't get an entry. Like many times I'm looking at a trade and it's just there, I'm just waiting, but I just never get an actual entry. Okay, so for me, I need some sort of selling opportunity. So here I was looking at a potential 5-minute break trade. I never got the signal. Then all of a sudden, of course, I'm keeping an eye on this area here. This is where the buyers have tried to go lower from. Okay, so we've got a downtrend. We've come back. They've launched, tried to push lower. This is a pivot point. Okay, and then here I'm looking to, once we break this pivot, buy. So you can see here I've actually bought right here, so actually 3 ticks before, so the actual pivot is up here, 1 tick past the area, so 1, 2, 3 ticks is here. So I actually bought here because one of the markets was, I think all the markets were just pushing through really quite heavily, so got in early, market came up. Again, you can see it hasn't gone far this time, it's come back, and then launched itself higher from, and eventually just kept on going. Okay, but it's that pivotal area that I'm basing it on. The downside fails, all the other markets are turning, and mean reversion is in place. They're looking to stay within this range of the day and head back to basically the highs, or where, somewhere higher anyway. So that's reversal. And then as far as directional trade, so let me just slide this down. It's a similar kind of concept, but I don't need the I don't need a failing previous trade. For example, if I'm looking for a sell here, a directional sell, I just need, if there's a reversal, I need some sort of buying opportunity that fails and then sell. This particular one, I actually do base this one on indicators, the predictive average. It's the one but I'm still looking at heavily basing on price action. So what I'm looking for is the market come up, just get this selling formation. Okay, so high comes down, pops back up without making higher highs, and pushes through and basically leaves a pivotal area again, and once it breaks that area, sell. But what I need is to be classified as, and again, I'm not basing it on indicators, but I'm needing indicator support, is I need the indicator, predictive indicator, to cross down, cross up, cross down. Okay, otherwise, if you're just looking for this level where it crosses down, and that formation on the charts, I mean that comes everywhere. But if I look for a predictive average to actually cross up, cross down, cross up, then cross down, and base it on a pivotal area, and base it on, like I said here, must have other market support. So many times this comes up, but all the other markets just aren't looking to go. So what will happen there, the ES will go down, pop out by a tick or two, and then head back straight back to the highs. But if all the other markets are breaking this same pivotal point, that's when the probability starts to really swing in your favor. So an example of that. Okay, so directional trade. Directional always comes. So occasionally I'll get a reversal on the first trend of the day in certain areas, but I know for a fact directional trades I can never get unless it's basically the second trend of the day. So what I need is an uptrend, so you can see here, and looking for that formation where it comes back, pops up, and then breaks this pivot, this area again. Okay, so you can see here predictive average has crossed down, it's crossed up, it's crossing down. Okay. But again, if I'm physically waiting for the predictive to cross down, I think it didn't cross down to here. So I wouldn't have actually, if it was actually going to be triggered like the auto 5-minute trades are, you wouldn't get these the signal till way down here somewhere. So again, I'm looking for the concept of cross down, cross up, cross down. But once it's either whatever comes first really for me. It's once the predictive average crosses down, then as it breaks the pivot, or if it's about to cross down and it's breaking the pivot, that's when I'm getting in. Because I'm putting more emphasis on price action, not the actual indicator. Even though here I'm putting a little bit more emphasis on the indicator, I'm still using everything as far as entry. It's based on the indicator. It's based on the price action. Okay, and again, I need other markets breaking through. So if you were to go through and look at this exact same chart, look at Russell, you'll see the Russell by the time I'm putting my buy order here. So as this candle's happening, I'm on the 1-minute chart. It looks a little bit more sort of, we can't see everything on the 5-minute chart, but if you're watching the 1-minute chart live, okay, you can see it's probably popping up. All of a sudden it looks like it's coming down, breaking this pivot here. As even if it's coming down, I haven't got the order on yet, I'm watching the other markets. As soon as I see the other markets, I've got I can see their pivotal areas as well. As soon as I see the Russell or someone just really start to break, I know I've got the setup, I've got the blueprint of everything I need. All now I'm just waiting for the other market support. As soon as I see the other markets break, boom, I'm putting on the order and selling. And that's my directional sell trade. Just one more example of that. So just quickly another one. Where was it? So I'm selling here. This is a little bit harder one. Like you can see here, and again, you just got to be very clear within yourself of where you want to do it. So I know when I first used to trade this, it used to be a little bit blasé and not quite enough direction for myself, and not enough just of a systematic approach. So I just have to make sure I go away and make it very clear of exactly what I'm looking for. So I've got all these little rules as far as can't go higher and can't go lower and all these sort of things. So this particular one here, you can see it's almost you could have sold here, but for a couple of reasons you wouldn't. Is for me is because one, it's made a higher high here. So here I got the formation, comes up, comes down, crosses up and crosses down again, but all of a sudden this makes a higher high. So that straight away just cancels out that particular trade I'm looking for, directional trade or reversal trade, because it's making a higher high. Obviously mean reversion is not quite on the cards yet, so I straight away cancel that. And even when it came down here, it hasn't physically broken the area where it went from anyway. So it's making higher highs, plus it's not breaking down yet. So it's easy for me to leave it there. Then all of a sudden it pops down here. Okay, and again, so this one now hasn't gone made higher highs. It's got crossing up, crossing down, crossing down, crossing up, crossing down. I don't know what I've said there, but anyway, you know the concept. Basically, it doesn't make a higher high. So I'm now basing on this area here. It comes down, looks to push down, pops up, comes down again. Okay, so what I need is other markets pushing through. Okay, so this one here is quite very tight, and what I know with this particular one is what can happen, and it's you can see here it actually broke by a tick here. I didn't actually sell here. I was waiting because I'm not looking for it to physically. I'm looking for it to physically break, but I need other markets to break as well. So what was happening here? I was watching other markets. None of them were breaking this area. It broke, came down, popped back up for a second, then the Russell and everything started to really go, and that's when I put on the order. Okay, it's very important to include other markets for me there, because I know that for every one of these that win, there's another one that looks a bit like this, where it pops down by tick, 2, maybe even 4 ticks, and then it comes straight back to the highs. But what will happen is most times the other markets aren't breaking. Okay, it's just ES that's just having a little bit of a look down there and it's coming back up. But if you see all the other markets all of a sudden break all these pivotal points or these key areas here, and you've got the setup or the blueprint of what you're looking for, then that's where you're getting in. So this is one where I just waited off. I think I had to wait about 4 or 5 minutes, but then the market started going. Look for the market come back to the price I want, and then sell. Okay, so that's the 6 setups. Sorry, I've gone 50 minutes. Like I said, I can't. It's hard to say these things really quickly. So hopefully you definitely got something out of that. Hopefully, Brendan, that answers your question. So that's the way I trade. That's the way, also you see in comparison how Seb trades. Both have great reasons for why they'll work, as long as you approach it the same systematic way. Both systems will absolutely work for you. So that's the way of approaching it. As far as the first trend of the day, you can